All right, we are having quite a day in the markets. The markets have not been doing well today. It's been a red day. Everything is pulled back. There's a couple outliers. I'm going to go over them. I've got an interesting list of stocks to review with you guys today. We're going to talk about Disney. We're going to talk about Amazon, and I'm actually going to give an update on NEO. You guys know I'm not in NEO, but a lot of you guys are, and so I'm covering it for your sake. I think you'll find my commentary on it interesting. There's a lot of interesting news stories which have been behind some of the drops. Not too many pops that we haven't seen just yet, but I'm going to cover those. This is the Stocks with Josh show. Thank you guys for joining me. Hit the like, say hi in the comments, throw a heart in the comments for me. If you need to get insights and stocks and crypto, I'm making videos every single day. Hit the subscribe and the YouTube all notification bell. Okay, we know what's up. We're pushing up against the Fed tomorrow. He's going to be talking, and everybody's going to be trying to see if he's going to be more hawkish or more dovish. As I said to you guys yesterday, the Fed futures tool is telling us that 99% of all investors believe that it's already settled. He will not be raising rates tomorrow. You can only imagine what a surprise it would be to the market if he did. I don't believe that he will. But interestingly, between yesterday and today, the Fed funds tool pointing out till what he might do in November, it dropped from a likelihood of a rate hike, a 25 basis point rate hike in November, dropped from a likelihood based on Wall Street's opinion from 31%, it pulled back to 29%. So moving into the Fed, not even having spoken yet, the market's saying that this Fed is going to get dovish. And I get that sentiment. The bottom line is that we are way closer to the end of the rate hike cycle than we are at the beginning. We've already been through a lot of rate hikes, and so there's the belief that those rate hikes are working. But here's a couple concerns that the Fed has to be looking at. He's looking at the fact that we've got rising oil costs. He's also looking at the UAW strike. That's absolutely going to affect the labor markets. And so I don't personally believe that the story is over. I don't believe that inflation's been conquered. It's his job to conquer inflation, to bring it down to 2%. And the closer he gets to 2024, which is an election year, the less time he has to make it work, because he's going to come under pressure. He's going to be told, get those rates down. Let's get this economy moving, even if it's just temporary. So let's dive into the S&P 500 heat map, and let's just take a look at the ugliness with our own eyes. One stock is showing a little bit of sign of life right now, and that's Eli Lilly. You guys know I've been covering Eli Lilly in recent days, and largely we're looking to enter puts to the downside, but Eli Lilly is showing a little bit of strength today, and I want to refreshen the chart for you guys. Let's take a quick peek at it. You can see based on my chart that it's pulled back above the support level that I had predicted of 578. Now, if that holds, we could see this move for a retest back towards the top of at least 595. But we have to get back above 578 for that to be a possibility. Right now, if it fails and it falls back beneath 578, then it would be back loading up puts. Right now, I think it's pulled back a fair amount, and I'm thinking that we're going to be trying to make a push back up and test the higher range before failing again. Ultimately, I think Eli Lilly has to be showing some weakness in the coming days and will trend back to at least its 50-day moving average, giving us a ton of opportunity to make some money on some put options on Eli Lilly. Then we've got Amazon. Now I'm going to cover Amazon. I'm going to go over some news stories, but I'm just going to quickly tell you guys that it came back to one of my support levels, which was 136. When it dipped below, I had to take a chance and I bought, because that's essentially what the game plan is. You put in those supports, you put in those resistance, you take profit at resistance, you buy again at support. And so I took a chance on the trade. I bought some calls at 136. This is just a scalp for me. I'm going to get right out of it, but I'm going to go deeper into my Amazon trade here today in just a minute. All right, and then we've got Tesla. You guys know that I gave support at 264 and 261. It came right down into the 261 range and reversed. I bought into some call options. This is also just an intraday scalp. I'm going to get into these more in just a minute. Let me take a quick station break for the Moomoo investment app. Guys, if you need better trade tools and you are in the US, Australia, and Canada, Moomoo is a zero cost to trade platform, and they're offering free stock. They'll give you up to 16 free stock just for opening and funding the account. You can click on the link in the top pinned comment to get the exact details for your country. I did get some good news for the Canadian audience. They're going to allow trading, I believe, right here at the end of September. That's not an official announcement. What I've been told is it's just days away. So what you're going to want to do is when you get that announcement on your phone, you're going to want to put in a minimum of $100 because you're going to be able to get some free stock when that opens up. I use Moomoo for the trade tools. They've got 8 conditional order types. They've got a great stock screener that I use to find hot stocks. They've got the best earnings calendar to track earnings season with. And I host a chat group on the app. I call it Stock Josh Fam. Get your free stock, start investing, Click on that link to get all the details, and then come find us in the chat group. All right, quick shout out for the Stock Squad Patreon. I'm a member. Stock Up with Larry Jones, Stock Mo, and Keenan Grace are all members. We're giving insights there every day. There's some other great traders in there. I've been watching people make money. Come over there, click the link for the Patreon, and check it out for yourself. All right, let's get into Amazon. Man, Amazon got absolutely smacked down. Josh, what is going on? Well, I've got some interesting news stories. This week, though, we did see Amazon fall a full $10, a near 7% pullback. Absolutely incredible. But let's just keep it in perspective. It's still trading in the upper end of a 52-week high, so Amazon is by no means falling apart, but it's got some volatility, which we did expect. There's been some interesting Amazon news I want to share with you guys. Amazon boosts seasonal hiring to 250,000 from 150,000 last year. That's incredible. They're absolutely bucking the expected decline in hiring. Right now, Reuters reported that retailers are doing the opposite. They're hiring their lowest number of seasonal workers since 2008. So the retail market is gearing up for a slowdown, and they are hiring less people. And they're basically telling us that they've given us lower forward guidance, and then you've got Amazon doing the exact opposite, hiring almost twice as many as they've hired in the past. They're telling us by that they're giving good forward guidance for the days ahead. In this same article, they revealed that they have actually opened up 50 new fulfillment centers. Specifically, these 50 new fulfillment centers target same-day delivery. So these guys are hiring more people, opening up new centers, while we're seeing companies like Walmart and Target and Walgreens closing locations nationwide. You see Amazon opening locations nationwide. I personally believe that Amazon is in a long-term uptrend, and we're going to see retail in a downtrend. It was interesting to me to see that Amazon and Tesla were the top two stocks being traded in options today. My goal for Amazon, technically, like I said earlier, is to close back closer to 137.70. That would be pretty bullish close on the day. There is some mild resistance at $136.95 that it's got to get over, and I will close my calls if we drop back below 136.50 just to lock in the little bit of profit that I've made there today. I also want to point out to you guys this ascending support line on Amazon. We pretty much came back, touched it. It was the fourth touch, and now we're moving back up. We've got to watch it. It could break beneath. If it were to break beneath, I would agree that Amazon's gotten bearish, and we're going to at least expect a move all the way down to 133 and possibly even 130, but right now it's holding, and so it could take us higher. All right, let's get into Disney and some Disney news. We've seen a reversal there. If you guys have been following my Disney predictions, I told you guys, as it's been recently running up, that it had to break over $86 for it to prove to us that it was out of trouble and moving higher from here. Well, we saw strong rejection at $86, and so that tells us that we are not out of trouble on Disney. And so let me dive into some news stories that caused this move to go down. Disney plans a $60 billion investment in parks, experiences, products divisions over 10 years, seeking growth in projects with robust returns. So basically, you've got Bob Iger back there, and he's saying, what are we doing well? What have we proven competency in? We've proven that in the parks and the cruises. Those have great profit margins. Let's just invest more in that. That makes a ton of sense. What I would call this is Bob Iger taking Disney back to its basics. And I do believe that even though the market responded badly to this news, I think it's actually going to be a foundation for bullishness in the days ahead. We're still at the lower trend. I showed you guys in a detailed technical overview of Disney. I happened to re-watch that video I made, and I loved it. I have to be honest, I sat there and I got more bullish myself. I think that we are in a period of time that's going to be less than a couple months where this is going to be forming a bottom. And I'm going to give you guys these fresh technicals. If it were to drop beneath $80.95, that would kind of confirm that we're going to retest the low. And that's where we need to be careful, because we don't want to see it drop beneath $79.70. If it were to do that, that would be a technical confirmation of a historic breakdown, and we would likely see it go to $74. But as I've told you guys before, I'm a buyer during this entire zone. I'm buying Disney every single day in a decent dollar amount. I'm going to accumulate while it's down, because ultimately I think Bob Iger's going to fix it. These guys have incredible connections. They've got access to money. They've got access to other large organizations. They're a partner with Apple. There's always been speculation that Apple could buy Disney. Disney's not going away. These guys are going to turn this ship around. I believe it's going to be very profitable in days ahead. Right now, it's turning into a value play for me. It's just too cheap, and it's time for me to buy Disney. But I will give you guys this. Okay, so I always talk to you about price and momentum. Right now, the price went to the downside, and the momentum to the downside increased by 71%. So price and momentum to the downside are in unison, which means that this stock is absolutely going to go lower. We don't have a reversal to the upside. We're going to continue to bounce along the bottom until we get the news stories that are needed for this to skyrocket. You guys are going to think that there's just going to be a ton of time to sit and wait on buying Disney. But at the point that it begins to get the good news story in place, it's going to move so fast, it's going to get away from you guys, and then you're going to be looking for it to come back, but it won't come back anymore. So that's why I'm buying it right now. All right, let me give you guys a quick update on NIO. Man, NIO's got so many headwinds, and they came out with some very interesting news today. Some of it, the market's obviously interpreted pretty poorly. Some of it, I think, is actually not as bad as the market thinks it is. Let's just review what's going on. So what they've specifically done that has caused the stock to fall so badly is they've got a share dilution. They planned a $1 billion senior note offering, and so this is really good for people who are at that level and able to buy those notes, but it's really bad for the shareholders because ultimately they're diluting the shares that you own, which means that has to be calculated into the price, which means the price has to come down. If they get that full offering filled, it tells you that smart money is interested and continuing to support NIO. It's not a dead company. It's not going to zero. It's not like Lucid stock. I personally don't think that it is. So in a way, this is bullish. It's just not bullish in the short term. It could be bullish in the long term. It's going to set them up to have the money they need to continue to make cars and to continue to grow their brand. And then you've got some surprising news that NIO has launched their own phone. To me, that's a little bit confusing, but let me read the news story to you. While the internet is full of mock-ups and renders of an eventual Tesla phone that Elon Musk has been mentioning a few times, it is and probably will remain vaporware that neither Apple nor Samsung would have to worry about in the foreseeable future. So basically, right off the bat, they're telling you that the Tesla phone is a lot of hype and not much of a reality, but what's actually happened is that NIO has perhaps beat them to it. They've come out with their phone. So one of the high-end electric vehicle makers in China's roaring EV industry, however, not only teased its first car-centric phone, but will apparently announce it as soon as this week. NIO may use its Innovation Day event on September 21st to unveil the world's first smartphones built from the ground up with the idea to facilitate the ownership of an electric vehicle. Now, I'm just going to tell you guys, don't expect a great deal of commentary from me on this. Other than to say, I don't really get it. I don't understand why an EV car company would make their own phone. Why wouldn't they just have the world's best app for tracking or the world's best software? Isn't that essentially what Tesla's done? They've got the best software and communication tool on their vehicles that you're able to interact with every time you drive. You don't need it on your phone. But there seems to be a concept here of integrating phone service and your EV. Now, if you are a diehard NIO lover, I'd love to hear from you in the comment section. Tell me why you think this is the most amazing thing and why they should have done it, because personally, I don't get it. All right, but let's just dive into the charts, because that's something that I do get. That's something that does make sense to me. Now, we saw a massive sell-off after NIO went up with an enormous move up in recent days. And for me, that move up was somewhat of a confirmation that NIO still has life in it. It still has room ahead and validity in this market, but one of the things that you guys have heard every single time I've covered NIO is that if it's below $9.50, it's in bear territory. If it's above $9.50, it's in bull territory. And we saw that recently it's pulled under $9.50, which means that there's a lot of room for it to test the bottom of its range. That's what being beneath $9.50 means. It means that you're in the bottom of the range and you're going to potentially retest some of those lows. So Josh, what are some of those lows? Well, I see strong support for NIO at $8.30 and $7.54. And here's the number one takeaway for NIO investors that I want to share with you guys today. If you are holding NIO and you've been holding NIO for over a year, it makes no sense not to buy these lower levels of support to bring your cost average down. If you're not buying these levels, then it means that you've got very low conviction on this stock and that perhaps it's time to let it go so you can invest your money in something that you are more bullish about for the next couple years instead of just suffering the rise and fall of this stock. So again, $8.30, $7.54, those would be levels, ideal levels on the lower end of its support range to possibly invest in NIO. And just to keep my opinion as straightforward and simple as I possibly can, I don't believe that NIO as a company or NIO as a stock is dead. I do believe it's an extremely high-risk play, and I do prefer Tesla over it as an investment in the EV space. But for those who are underdogs, again, I'd love to hear from you in the comment section if you're holding your NIO, if you're bullish on NIO, and if you're bullish on that NIO phone. All right, guys, that wraps me up for today. Just a couple quick notes. I have been a little bit less active today because I am still suffering from allergies. My eyes are baggy and red. In addition to that, I'm getting out of town. I'm going to escape these allergies for a week. I'm heading back to Chicago. Tomorrow's largely going to be a travel day, so I may not be producing a video, but I will again produce a video on Thursday. Guys, again, thank you for hitting the like, hit that subscribe and that YouTube all notification bell to get that next video update. While I'm traveling, even though I won't be doing a video, I will be in the Discord to answer some questions. As always, peace and blessings. Take care. We'll see you soon.